Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from April 7th to April 11th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from April 7th to April 11th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Eurozone retail sales data, which could provide early direction for Euro traders. Tuesday brings Australian Westpac consumer confidence and NAB business confidence figures, along with Canadian IVPMI data. Wednesday features a major central bank decision, the Reserve Bank of New Zealand interest rate decision, where the bank is expected to cut rates to 3.5% from the current 3.75%. We'll also see Japanese consumer confidence data, and the FOMC minutes from the latest Fed meeting. Thursday includes the highly anticipated US inflation figures, including core inflation rate and headline inflation data. We'll also see the weekly initial jobless claims and Canadian building permits data. Friday concludes with UK industrial production and GDP data, US producer price index figures, and Michigan consumer sentiment. This week's key market-moving events will be the RBNZ interest rate decision on Wednesday and the US inflation data on Thursday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the New Zealand dollar against the US dollar and the US dollar against the Japanese yen, as both instruments face significant data releases in the coming days. Let's start with the New Zealand dollar against the US dollar. Looking at the daily chart, the New Zealand dollar is currently trading around 0.5596, having recently pulled back from resistance. With the Reserve Bank of New Zealand interest rate decision ahead on Wednesday, the pair typically shows increased volatility during such periods. We measured an average of 48.96 pips volatility in the 4 hours following past RBNZ decisions. Looking at important levels, the Kiwi dollar has support at 0.5551 and 0.5517, while resistance can be found at 0.5646 and 0.5685. The price is currently hovering near the 20-day moving average, the red line, which is acting as dynamic support. The stochastic oscillator is moving lower, suggesting potential for continued downside in the short term. The RBNZ is expected to cut rates by 25 basis points to 3.5%, which could put downward pressure on the Kiwi dollar if confirmed. The 0.5551 support level will be particularly important to watch during this event, as a break below could accelerate the downside movement. Now, let's turn to the US dollar against the Japanese yen. On the daily chart, the dollar-yen pair has experienced a significant sell-off, currently trading around 146.88 after breaking below key support levels. The pair faces a busy week with Japanese consumer confidence data on Wednesday and PPI figures late Wednesday night, which typically generate 67.17 and 41.27 pips of volatility respectively. Looking at important levels, the dollar against the yen has support at 145.39 and 143.56, while resistance stands at 148.71 and 150.55. The price is currently trading well below the 20-day moving average, the red line, which is acting as dynamic resistance. The stochastic oscillator is approaching oversold territory, suggesting we might see a potential bounce, but the overall trend remains firmly bearish. Thursday's US inflation data will also be crucial for this pair, as softer inflation figures could lead to further dollar weakness. The 145.39 support level will be key to watch, as a break below could open the way toward the next major support at 143.56. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's RBNZ decision and Thursday's US inflation data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.